Good afternoon, this is Stewart Solaka with ChicagoStock Trading here at the studios of Mr. Top Step. And today we wanted to bring to you a very short, quick analysis on the daily S&P 500. And just to look at the overall picture, we started 2014 in a very tight sideways range. After starting 2013 on a gap open higher at 1440, we closed the year on the highs as shorts threw in the towel into the end of the year. This year, we started the first 2 weeks in a very tight range before seeing sellers come in, liquidate the market down to 1732. This was the first time in 2 years that the market broke its 6-month volatility window to establish a bearish bias for the first half of the year. This was used as a bear trap as the market put in a V bottom. It reversed all the way back to where it broke down at 1844, squeezing out those shorts, and at that point, with the V, looking for stabilizing on that plateau at above 1840 and looking for new buyers to come in. Once the shorts are squeezed on that V reversal, at that point it's up to new buyers to come in and stabilize the market. And that's what we've seen over the past 3 months is the market trade in a very tight range, making new highs, and on those highs seeing longs take profits into them. And when the market has attempted to correct, we haven't seen too much of a conviction to the downside as the market is holding above the reversal, not allowing any sellers opportunity to see the market back below 1800. So going into the last month of the first half of the year, we're seeing shorts again throwing the towel. After the last non-farm payroll number in May put in a lower high, this was the first time to put in a lower high in the last 3 reports. We put in a low of 1859 in May, and we retested that low and we weren't able to breach the May low. Because we started off with 1859, we ran up to the non-farm payroll number, came down and retest that. We weren't able to break the May low, and from there we came back up and took out that May high. By taking out that May high, it was a major pivot because that's when shorts got squeezed out of the market, and this is what's led to this breakout and squeeze high over the last 3-month trading range, just using the fuel of this breakout. If we look at the cash 60-minute chart, we can see since the island top attempt at 1898 and the pullback to retest the May low, we did gap open higher at 1875. Now this gap put the pressure on the short side, it squeezed them out, and since then we haven't looked back. We've just been grinding higher. We've taken out 1900, it's been a slow grind, attempting to continue this upside grind. If we look at this daily chart, and we can see what's been taking place since the break above 1898, the market's been riding its upper Bollinger Band, and this is what they call a Bollinger breakout. And going forward, pullbacks down to the breakout range at 1898 is going to be a major level of support. Market pullbacks to that level is going to act as the top of the range that it broke out of. So if we take the range from January, which was 1844 to 1732, we add that to 1844, that gives us an upside objective into the 1950s. This also completes a 76.4% Fibonacci extension at 1956 by using the 2013 May low up to the 2013 December closing high, down to the last correction at 1732 in January of this year. It gives us that upside objective of 1956. So this only gives us an area of where the market can expand to using that range, and now that we've broken above this range, it gives us that upside target of where it can expand to complete that objective. If we pull back to the top of the range at 1898, it's going to act as support so that the market broke above this resistance. Pullbacks into that should provide an area for buyers to try to defend. If we break below the May low of 1859, now that's going to be a major key pivot that is going to shake out the long side and try to establish new momentum to reverse the market. So this is the last month. For the first half of the year, we're seeing shorts again throw in the towel and try to complete this upside objective into 1956. We've reached first major resistance against 1925, which is the psychological numbers of 25, 50, and 75s. And going forward, July will begin the second half of the year, and that will provide more clarity after this month is done and the first half of the year is done. July starts the second half of the year, and the first 2 weeks is the opening range, which provides the 6-month pivots and the volatility windows. And if you'd like to receive those volatility windows, you can follow us at ChicagoStockTrading.com, and you can also follow MrTopStat.com. And we thank you for following us today, and we'll try to bring more of these updates to you. Thank you.